Okay, good afternoon, ladies and gentlemen. Here we are. It's Monday, 13th of August, 2018. You're here today with me, Paul Wallace. I'm a trader, analyst, and coach. And we're here for what is, I think, the third session now of Mastering the 4 M's of Trading. This is a series that we at Admiral Markets are running that will, over the course of our sessions, take you through a journey about educating you and developing you in the 4 M's of trading. For those of you just joining us for the first time, then have no fear. If you don't know what the 4 M's are, you will very soon learn them. For the rest of you, really thanks for joining us again. Look forward to engaging with you. As always, before we sort of start with the let's call it like the real meat of the session, I'm just going to run through a quick risk disclosure. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 83% of retail investor accounts lose money when trading CFDs with this provider, Admiral Markets. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Please ensure you fully understand all risks involved. Forex and CFD trading is a risky activity, and this presentation and accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the authors. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients could still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets receive a compensation of account deficits with the maximum payout of £50,000 sterling as per our negative balance protection policy. So, ladies and gentlemen, why else would you be interested in using Admiral Markets UK? Well, here at Admiral, we offer a wide spread of instruments and products for you to trade. And in particular, one of our most popular instruments, the DAX 30. The typical spread is very tight, typical spread of 0.8 during the main trading hours. What we also provide is a wide range of educational webinars and seminars, including myself and many other fine speakers. And not also do we offer the MT4 and MT5 platform, but we have our own Supreme Edition, which is an excellent addition to the MT4 and MT5 trading platforms. As always, if you have any questions about this or any of the elements that we cover, then you're very welcome to contact your account representative at Admiral Markets, and they'll be very, very happy to sort of engage with you and help you in any which way they can. So this is the last 1 or 2 times I'll run this slide. For those of you who don't know me, my background is, I came out of the military towards started trading .com shares during the .com boom in the late 90s, transitioned across to trading FX and indices and commodities during the second Gulf War, and then I've spent my time either trading for myself or trading for funds or managing client funds, and also helping and supporting traders across the entire spectrum, from guys and girls who are just beginning in their trading journey to experienced trading professionals at sort of tier 1 banks who are managing sort of major books. I'm very fortunate that now allows me to sort of spend my time between sort of Dublin, Cheshire, and London, spending time trading, working with great clients, and doing a little bit of farming when I get the chance to drive the tractor. So I share this to show you that my background is I don't have there's no silver spoon background in my family. Everything has come from sort of tenacity and hard work and determination and perseverance, and that has also sort of played into my trading success as well. And that means that if I can achieve that, then it's very achievable for yourselves. And here during this series, I'm going to sort of show you a good part of how I go about trading, and also hopefully give you a little bit of development and insight into ways that you can move forward in your own trading. So with regards to my own particular trading approach, well, as I said, it takes 10 years to be an overnight success, and that's really about it takes time to sort of to work and to develop and become the very, very best trader that you possibly can be. And that is a process that's ongoing even for me today. It's always about working to try and become the very best trader that I can be. Primarily, I describe myself as a discretionary based method trader. if you're completely new to trading and don't really fully understand what that means, well, I guarantee by the end of these sessions you'll have a very, very good understanding of it. I'm primarily a swing trader. Okay, that's what I like to sort of have a few of my trades. They'll be open for a few hours to a few days to a few weeks. I will also have some much longer term positions and also some very short sort of intraday scalps as well, which we'll touch upon a little bit later. I'm a big believer in that simplicity is key. Human beings, and myself included, we very often tend to overcomplicate things, okay? And so I realize that, in trading, that keeping it very, very simple works for me far, far better, okay? It's better to have a simple plan that you can execute well rather than a complex plan that you struggle to execute. Execution is key. In terms of how I make my decisions, I'm actually, I use a sort of a meld, a range of fundamentals, technical sentiment, and geopolitics into my kind of my ideas, and then primarily, I look to trade FX indices and commodities. I do a little bit of work in equities and cryptocurrencies, but primarily in the sort of my swing trading, it's mostly FX indices commodities that I focus on. And my overall sort of trading philosophy, especially within FX markets, is I'm looking to buy strength and sell weakness. Okay, I'm just looking to see, which is the strongest currency because I want to be a buyer of that, which is the weakest currency because I want to be a seller of that, and then I'm just using simple pullbacks for entry, just simple price action. Okay, looking at primarily sort of weekly, daily, 4-hourly charts, all right, to execute and manage on the daily and 4-hour charts, all right, and as I said, just using simple price action techniques for entry. That's it. Nothing, as I said, nothing overly complex. Simplicity is key. So with regards to my swing trading, I'm primarily a trend trader. Okay, I'm looking to buy strength, sell weakness. I'm primarily looking to find where is the dominant trend, and then look to sort of build a position within that. For my intraday trading, I'm actually quite the opposite. I'm sort of primarily a mean reversion trader. Okay, I like to see markets get a little bit overextended, and then I'm looking to see is there an opportunity for me to take a sort of a short trade back towards the mean. All right. So once again, I appreciate some of the people here might be completely new traders, might not understand that well. I would I would just sort of ask you to come and join us for these sessions, and over the next few weeks and months, what we'll do is we'll work on that, we'll build on that, and I'll fully explain that. So what do I hold for expectations for these sessions? Okay, my job is to educate you about the 4 M's of trading, so that I want you to be able to go away and start to analyze any market and be ready to trade it. I'm very big on being able to sort of operate in a sort of a time frame and instrument agnostic manner. Okay, that means my belief is that traders have to become a versatile trader, the ability to sort of trade any instrument in any direction on any time frame. You should have the skills to be able to do that. Now, by all means, you might actually focus on a couple of niches that work you well, but you should have the ability to at least be able to go and analyze any market and be ready to trade it. And so by doing this through a series of education on these sessions, a little bit of mentoring, a little bit of coaching, I'm hoping that I'll be able to raise your self-awareness, certainly about trading, but also most definitely about managing risk and managing yourselves. For yourselves, ladies and gentlemen, what I would just ask is that I appreciate when I do these sessions that I have there's a broad range of experience in the room, okay, from people who are complete beginners to people who've many years trading. So I would just ask that you indulge me. I try to explain everything so that every element of the spectrum manages to sort of to learn and to take something away. But of course, within our time limitations, for about 45 minutes or so for our sessions, I would just ask for your forgiveness if I'm unable to go into everything as totally as in depth as you would like. That kind of limits me on the breadth and depth of topics. So what I'm going to always do is just focus on tools that you can use tomorrow. Okay, that's what I want you to be able to do, to see something in a session today that you could take away and utilize tomorrow in your own trading, because that's the way you get better. You take some ideas, concepts, you take them away, you learn how to use them, you practice them, you see how they work for you. Do they meld with your own particular personality and trading beliefs? With that, you can utilize and sort of adapt and develop those ideas. So those are our expectations for our sessions over the next few weeks and months. So mastering the 4 M's of trading. Okay, so I won't go through all the 4 M's in detail today. If you go back to the video webinar archive, you'll see session 1. I go through them in a good bit of detail. But what I want to do is for people who are joining us for the first session, what I talk about is in this whole session, and whenever I even meet traders, is talk about you have to be able to master the 4 M's of trading. And those 4 M's are markets, method, money, and myself. Very often new traders, completely new traders, think they just need to focus on the method. Okay, they just need to know where to buy or where to sell. That's it. But as you develop as a trader and as a human being, because I assure you trading live markets will also develop you as a human being, you'll realize that there is more to it than that. Okay, it's about being able to understand the markets that you're trading, whether they are the most suitable ones for you, whether those markets are trending or consolidating. You're understanding about the method you're using. Is it the right method for that particular market? If that you hear me sort of say in the last few sessions, if you have a trend following method but your markets are range bound, well there's a divergence there. Okay, and that's when people start to experience challenges. Throughout it all, actually, managing the money becomes, is crucial. It should be a priority number 1 about how you manage your risk, how you manage money, how you manage trade, and that leads on to that final element of managing myself. Now, it has to be said that most of the men who are involved in trading don't realize that how important that is until they actually had a little bit of a let's say a challenging trade or two. But actually, as you grow as a trader, you'll realize that managing yourself, okay, becomes hugely important. Okay, becomes hugely critical towards being able to trade well in a sustainable and prolonged session. Okay, and that is something that will be, let's say, it's kind of a theme that will run through all of our sessions. Okay, there's a little bit of it in today, but there will be some of the sessions will focus on one of the session over the other. Okay, but there'll always be like a little bit of a thread of managing myself throughout all of them, because ultimately we're all humans, we're all human traders. Okay, and so we are we're always learning about ourselves in every way possible. So why do I think these are important? Why do I think this is, relatively key to traders? Well, quite simply, it's that, what I see from working with traders is that, when all 4 of those areas are in an alignment, well, that's a kind of a little bit of a sweet spot that trader tends to be in, and that's when they tend to trade at their best. And on the flip side, if you're having a little bit of a challenge with your trading, okay, if you're having a bit of a hitting a few obstacles, well, my first advice to people is always, well, just check in with how you're doing on managing those 4 M's of trading. Okay, is there 1 or 2 of those areas that perhaps you've neglected? Is there 1 or 2 of those areas that maybe you're not on top of? Okay, because I can assure you, if there's a couple of those areas that are out of sync, well, then that will be contributing towards your challenges. So being able to keep on top of those 4 M's, to manage them, to understand them, to learn about them, to develop your own skills and talents within those 4 areas will all help towards moving you towards being the best trader you can be. And that's what I want for you from these sessions. I want you to help develop you to be the best traders that you can be. So yeah, as I said today, the last couple of sessions we've focused a lot on markets and method, and we're gonna carry on with that a little bit today. There will be a little bit of a theme of myself running through it, and I'll touch upon that. And then what we will also be doing is we'll be doing specific sessions on method and money down the line. Okay, just to focusing, to build you, to give you some ideas. Okay, so hopefully, as I said, over the sort of range of these sessions, you're going to start to build them. Okay, just week by week, bit by bit, you can go away, take away, practice what we've talked about in these sessions, so that, as I say, week by week, we're just building upon our skill and knowledge base. So I put up this slide sort of the last week or two, and the reason I do is because if we're going to look at markets and method, all right, well, ideally we need to have a way of analyzing the market, and I put this slide up as it's a bit tongue-in-cheek about the 4 horsemen of analysis, and the reason being is that I find people can sometimes they can get a little bit stuck in their silo. Okay, in terms of, if you're a technical trader, you'll never be interested in fundamentals. fundamentals or sentiment or geopolitical, or alternatively, if you're a big macro geopolitical guy, well then you might take no notice of the other elements. And so people can sometimes get very very caught up in their silos, whereas my opinion is that I will just take what works for me. Okay, and for me, over my years, that means yes, well, I have primarily a focus towards technicals. The other elements all come together as well. Okay, and it's melding that together, which allows me to analyze a market, and from that then to start to sort of to build a trade plan. But one of the other elements of it is that, as I say, people will debate about which is the best. Okay, in terms of analyzing your markets, fundamental, technical, sentiment, and the message I repeat here and every time I talk about is that you don't need to get too caught up on it. Okay, because the reality is that it's nothing more than a decision-making framework. That's just what you need to look at, ladies and gentlemen. All right. The reality is, analysis is all about having a decision-making framework that allows you to consistently make a decision on whether you're going to be a buyer, whether you're going to be a seller, or whether you're going to sit on your hands, whether you're going to do nothing. And really that's it. Okay, that's it. Okay, we, as I said, right back at the start, human beings, and I include myself in this, we very often overcomplicate things. Okay, we think to ourselves, oh, it can't be this easy. Oh, it needs to be harder than that. It needs to be harder. No, it can't be that easy. And I, as I said, I'm as guilty of that as the next person. Okay. And so it is about creating, a simple, robust, objective, and consistent way to make one of those three decisions. All right. You're never going to be right all the time. That's trading. Okay. It's more about, can you focus on your decision making framework? Okay. That's what we're looking for. That's what I'm interested. Right. And so hopefully, we'll go through these sessions and, you'll hear me talk about it. And for those of you who join the sort of the real time trading ideas sessions that Admiral Markets run every day at 10 o'clock London time, I run the one tomorrow morning at Tuesday, and hopefully I'll give you a little bit of a flavor of how I, use my own decision-making framework, okay, about pulling all these elements together and forming it into my own framework for my own decisions. And that's what every individual has to do. And it's a case of a little bit of trial and refinement, all right? Some of the elements I'll talk to you about, some elements will resonate more with you. Some elements you might sort of, reject. You might not feel terribly comfortable with. I just would ask you to just be aware of, what resonates with you, what you reject. Why is it that you might reject an idea? Is it something that is alien to you? Is it something that's, completely different from what you've been taught? And that's okay. It's about, as I said, it's about understanding yourself so you can start to build this framework of your own. So, we talked, I think the last session about just, the very basics of understanding, really, ideally is, if we look at this as sort of, let's say, swing traders, longer term traders, it's about, primarily being a trend trader, and, about building a sort of almost like a very simple process, okay, like a simple process that allows you to make that decision. All right, well, am I going to be a buyer? Am I going to be a seller, or am I going to do nothing? Okay, sometimes when markets are a little bit wild, sometimes that's the best thing to do. Okay, sometimes that's the best thing to do. So here we go. Here's a little kind of a little 4-step, 5-step part that we can take away and start to work with. Okay, and we're going to speak about this for the remainder of the session, and then, as I said, I always try and switch across to the charts. We can have a little bit of a look at this. So what I talk about is, just simple framework, simple steps that you can follow. Okay, so whenever you open a chart of anything, okay, and I don't really care whether it's the monthly chart of the euro dollar, or whether it's a daily chart of Bitcoin, or it's a 1-minute chart of the DAX. All right, whatever you're trading on, what I talk about is you want to start to define, let's call it levels of interest. Okay, levels of interest. And for beginners, okay, I talk about trying to define levels of support and resistance. Okay, as we build up, then we start to think about particular numbers, areas, order blocks, supply and demand. Okay, but to begin with, let's just keep it simple for this week. Define levels of support and resistance. Step 2 is define in that instrument we're looking at, is there a trend? Okay, is there a trend? We have a little simple way we can do that. And then what we're looking to do is we're looking to see how price reacts at those particular key support and resistance levels, and we'll talk upon that more in the next few slides. And then what we'll be looking at in the future sessions is, well, once we're at those particular, let's say those kind of particular areas or those particular ambush zones that we're interested in, then what we're looking for is we're looking for particular price action signals at those particular levels of interest that give us that trigger, okay, that framework to we know that we want to be a buyer or a particular seller, we want to do nothing. Just help us sort of develop that decision making matrix. And we can also look at, and we'll look at in future sessions about the effectively, is that part of a bigger chart pattern. So if you're a completely new trader joining us, don't worry about step 5. Over the next few sessions, they will start to it'll all start to be revealed, and it'll all start to hopefully build for you as we go on. But here we go. Here's just, like I said, simple steps to sort of get us started, to just get us looking at anything in particular, and start to build a picture that allows us to sort of fulfill our decision making framework. So, step 1, define levels of support resistance. Well, what does that mean? Well, what I talk about is when you open your chart, okay, here we've got the Admiral Markets, you've got the Supreme edition of both MT4 and MT5 available to you, okay, the fine trading platforms to start to cut your teeth on, okay, that allow you to engage with the market and provide a wide range of instruments. Is that I look at the monthly, the weekly, and daily chart and start to draw in horizontal levels of support and resistance. And we'll have a look at a couple of charts in a little bit and just go through that. Show you how we can do it. What we'll also do is to sort of take note of, also look at psychological round numbers, okay, big round numbers, BRNs, okay. So maybe it might be 120 or 140, okay, 110, all right, So it's in pound against the US dollar, we've just recently broken 130, okay. So we're human beings engaged in markets. Even when there is a huge amount of robots in the market, algos operating, it's still human beings operating in there. Okay, we look at psychological round numbers, so it's always important to sort of be aware of them when we're looking at a particular chart. And if you're looking for a bit of help, okay, and sort of trying to identify where those particular levels of support and resistance might be, well then we can also use fractals to help, all right? And I appreciate some of you might look at that and not have a clue what fractal is, but have no fear, Paul's about to to share that with you. So where are fractals? Well, this is for the Admiral Markets MetaTrader 4 platform. Okay, I'll show you exactly on the chart in a moment. But if you look under the Insert tab, then Indicators, then go down to Bill Williams, and then down to Fractals. That will bring up the fractal indicator there for your chart, and I'll show you what that actually means in a moment. Okay, fractals come from a chap called Bill Williams. He wrote books called Trading Chaos. Okay, about chaos theory, operating markets. They're a good trading book to read, but I'll show you how and why they become of interest to myself. So, for those of you, as I said, who are completely new, all right, fractals are pretty much it's a price action phenomenon. When you select it on the MetaTrader 4 platform, what will happen is every so often you will see these little these little triangles, okay, these little triangles sort of drawn on your charts. Let's see if I can use the tools on here to draw. Okay, hopefully you can see that. I have to caveat, ladies and gentlemen, that I'm a better trader than I am an artist. So I ask for your forgiveness and indulgence with my drawing skills. Okay, as I said, I'm a better trader than I am an artist. But what we'll see is you'll very often see these little triangles above or below the the price action. And what is that? Well, that's giving you an indication that that's a fractal. A fractal is made up of, here we go, of 5 candles. An up fractal, okay, is where the high of the candle, which would be this one here, is higher, okay, than the high of the 2 candles before and the 2 candles after. So it becomes a sort of a 5 candle pattern. A down fractal is, not surprisingly, is the opposite, where the low of the candle, all right, is lower than the 2 candles before, and it's lower than the 2 candles afterwards. Okay, so think of it, it's just like forming a V. Okay, it's just like forming a V. Okay, that's all it is. All right, that's all it is. But it is, it's a price action phenomenon. It's actually a natural phenomena within nature itself. Okay, and it can show up on on all time frames in all instruments. All right, so let me just try and get rid of some of these drawing tools. Let's clear that. Excellent. Okay, we're in business. So how can fractals help a new trader? Well, here we've got a little bit of I think it's a weekly chart here, and hopefully you can see, I've just, we've had a particular, I've drawn in what was a support level there originally from a period. And what I'm starting to see here is, go to the pen, is that, I've just drawn in, there's areas where we can see that, not surprisingly, when there are fractals there, think about what's happened. Prices come down and it's been pushed up. Prices come down, it's been pushed up. Down, pushed up. Down, pushed up. Okay, it's telling me that for whatever reason, okay, down there there are still quite a lot of, in this particular case, there's still a lot of there's still a lot of bulls there. Okay, there's a lot of bulls there hiding in the long grass, waiting to sort of come out and take a bite out of the bears. Okay, so, or out of the sort of the herd that is running downwards. Okay, so that's what it's one of the things that's helping me sort of just gauge my where those particular areas or zones, okay, of support resistance might be. Okay, so I start to take note of them. Okay, start to become interested in what I see and how that can help me with my own particular trading ideas. So, as I said, fractals can help you. When I see fractals happen at quite a few of them happen at a particular level, it just gives me an indication that has been a particularly strong area of support resistance, and that I want to take note of. What I want to do also is to define a trend. Okay, when I'm looking at an instrument, all right, and the key element. This is the markets, the 4M bit, is that at its simplest element, I need to know that you as a trader can identify whether an instrument is trending or consolidating, because very often I see new traders who don't really fully grasp that, okay, or struggle with it a little bit, and hopefully what we can do is make it a little bit easier, a little bit simpler. Okay, excuse me. So price action traders, technical traders, especially on the sort of swing side, we prefer to trade with the trend. All right. So how do we define a trend? Well, if you remember, those of you who joined us for last week, okay, our second session, we went into that a little bit more about defining a trend using price action, about how to identify higher highs and higher lows for an uptrend, and identifying lower lows and lower highs for a downtrend. And so that video will be in the archive. It'll be on the Admiral Markets YouTube channel. So by all means, please take a look at that and enjoy that, and you'll be able to sort of have that clarified for you if you were working or sort of trying to understand that. But here we go. Let's have a look at this. I think this is a chart of the DAX on the weekly. So what I've drawn in here, very simple, is hopefully you can see that here the start of the on the left hand side of the chart. The market was pretty much in a consolidation period, and I had quite a few. Here we go. Fractals to all around the same level to the top end, and then a little bit messing around there, but what we had was a particularly very strong level of resistance there. Okay, and in that particular area, so this is weeks, so 1, 2, 3, 4, so this would have been for about 3-4 months. Okay, we could see that in that particular case, the DAX was effectively just range bound. It was just bouncing back and forth up until of course, we had a breakout of that. Okay, we had a breakout, a very clear break, a very strong big break on the weekly chart. It's always a good sign. And this is, then we can see that the market actually went into a trending. Okay, it's very, very clear, and hopefully what you can see is that the fractals were also able to help there in terms of what we were getting we were getting higher highs, okay, and we were also getting higher lows, okay, higher highs and higher lows. Okay, remember what we talked about last week? That was how we identified whether something was in an uptrend, all right, or lower lows, lower highs for a downtrend. So there the fractals can help us, okay, being able to sort of just confirm that we're in a nice particular uptrend. One of the bits I think I said last week, and in fact I say every time, is that if you're looking at a chart and if you can't work out if the chart is in a trend or not, well then the likelihood is it's probably not in a trend. Okay, it's probably not in a trend. Good trends will leap off the chart at you. Okay, good trends will leap off the chart. If you find yourself having to kind of curve fit it or force it, or sort of try and convince yourself that there's a trend there, well then I'll give you a bit of advice that there is no trend there. Okay, there is no trend. Good trends will leap off the chart at you. Okay, and the more practice you do, the more you look at charts, the more look at different instruments on different time frames, the quicker you will become able to sort of identify and see those particular trends operating across the markets. So as I said, if the trend isn't leaping off the page at you at the moment, then tell yourself there is no trend. Okay, there is no trend. Don't try and force it. Forcing it never really works as well as you want it to when it comes to trading. So here's another reason how fractals can help. Here we go. This is we're in a downtrend here. Okay, and we can see what we're getting here is that we're getting lower lows. Okay, we're getting lower lows into a particular support level. I think this will be gold. Okay, 1050. But what we're also getting is lower highs. Okay, lower highs on the fractals and the price action. Okay, so just think about that. What has happened is it's a V, isn't it? Price comes up, gets pushed down. Price comes up, gets pushed down. Price comes up, gets pushed down. Comes up, push down, come up, push down, come up, push down. Okay, so it's telling us here, there is the sort of the bears are in charge. Okay, every time price tries to push up, it gets smacked down. Okay, right up until what happens here is that we get a break of that. Okay, once we start getting a break and a good strong close above that previous fractal, well, that's the first indication that that downtrend is over. Okay, it was probably a bit of a sort of more of a nice sort of downwards wedge if you were to look and drawing the patterns on there. But you can see that price was just grinding its way down until it hit that 1050 area, and then it bounced off that. Okay, and bounced off pretty strongly, and that was our indication that for the moment, for that period, that downtrend was over. So that's how fractals can help us identify areas of consolidation, can help us confirm that there's a trend, and also can help us confirm when a trend has completed. Okay, when a trend has finished up and broken, and that is all useful information to us as traders. So, yep, here you go. I think this is cable. Yep, this is cable, but it's pretty much the same pattern or the same same message that what we're starting to get. We can see we're getting higher lows, all right, higher lows across the board along with higher highs. That shows us that that the downtrend that we had seen here has completed. Okay, and we're starting to grind our way north, and hopefully you can see that. So, especially on the longer time frames, okay, the fractals can really help confirm where area where the trend is still intact, okay, and how we can utilize that for our own benefit. And we'll talk more about that in terms of how to execute around that down in one of our future sessions. So, what we've looked about is, as I said, defining levels of support and resistance, defining the trend, and then what we're looking for, what we're interested in is how does price react when it hits those key support and resistance levels. Okay, one of the things I know I'm using the words level, but it becomes a little bit of a zone really, and and as we go into more advanced elements of it, further down the road, okay, that will become more apparent. But what we're particularly interested in at the moment is, well, right, how does price react when it's at those particular levels? Okay, well, what is price doing? And it's when we see price at those levels, performing certain price action behaviors that we start to get interested. Okay, and then we start to sort of get ready to move from the sidelines to actually being a buyer or a seller. Okay, that's the sort of the way we move forward in our trading decisions. All right. So what does that actually mean? Well, I've mentioned it once or twice briefly. Is that we're looking for a confluence of events to happen at key levels. Right. That's where we start to get a bit we get interested. Okay. When we've got specific levels of, let's say, specific levels of support in an uptrend where price starts to put in particular price action behaviors. We're getting 3 or 4 things. Okay, all happening at the same time and place. that is where we're looking to sort of become a trader, okay, to actually move from being an analyst to actually moving towards being a trader and actually putting a trade on, okay. And that's and although we're here looking at particular let's say swing longer term charts, as I said, it doesn't really matter whether you're trading the monthly chart, the hourly chart, the 5-minute chart, okay. The concepts are the same, okay. The concepts and the ideas are the same, and that's what we're particularly looking to understand. So, as I said, for new traders, all right, I'm sort of pitching this as, as we're, new traders on our journey. At the moment, what I'd say is, as I said, keep it simple as you can. When markets are bullish, you want to be a buyer. When markets are bearish, you want to be a seller. That might sound as if I'm oversimplifying things, or that might sound like absolute common sense, but you would be surprised, ladies and gentlemen, how quickly common sense can go out the window. Okay, when we see a fast-moving market, people experience a little bit of FOMO, a little bit of fear of missing out, and suddenly they can start making impulsive trade decisions. So what we're doing is we're just building a few steps that give us a little bit of a framework that help us to keep on the right side of the market. Okay, when the markets are bullish, you want to be a buyer. Markets are bearish, you want to be a seller. What we want to do is we want to define, is there a trend, and then trade with it. So if there's no trend, there's no trade, no signal, no trade. As I said, you keep it very simple. You can take a screenshot of that slide, stick it up on your wall, okay, just to remind you, just to keep it simple, keep yourself on the right side of the tracks, okay, and to work with that, okay. And that's what we're looking at, and that's what we're focusing on. So, as I said, step 1, okay, whenever you're looking at chart, define levels of support and resistance. Step 2, define your trend. 3, identify areas where you're looking for price to react at those particular levels or areas. And then what we're going to look at in next week's session is about looking for price action signals at support and resistance levels. So things like you might have heard of before, like pin bars or engulfing candles or inside bars, okay, things like that you might have heard of before, but maybe maybe what you've heard of them is about trading them in isolation. Just whenever you see one on a chart, you actually you go for it. But actually what I'm here to do is to sort of build a picture. Okay, I want you to build a picture. I want you to have a framework. I want to have a confluence of events, certain things happening at certain times that allow you to make a better trading decision. That's what I'm looking for you to be able to do, ladies and gentlemen. And that's what we'll be looking at in particular. Step 4 over the next few weeks, and then step 5, bigger chart patterns there, sort of the week or two after that. So, as I said, week on week, we're just building our sessions, session by session, week by week, just helping, I hope, just re-emphasize the good habits for those experienced traders who are joining us, and hopefully just slowly but surely giving you a few ideas and a few steps to take away and work on for the new traders that you can practice until we have our next session next week. So, just to finish the slides before we switch to the charts, okay, the big picture recap is, remember, you always want to be managing those 4 M's of trading: markets, method, money, myself. All right, just ask yourself. You can ask yourself here today. You can score yourself out of 10 very quickly. You're right. How are you doing? Are they all in alignment in terms of how are you doing in managing those 4 M's of trading? Okay, how are you doing? Are you managing them? Are you mastering them? Okay, and that's if you feel that one of the areas is a bit weak, that's okay. That's okay. It's better to accept that and to know that, because once you know that, well, then you can start to work on changing that. Okay, you can change that. Okay, and we'll happily help you here in these sessions. Okay, the Admiral Markets Mastering the 4 M's of Trading. We will happily go through all of those 4 M's over the whole series of webinars, and be able to help you master those 4 M's. That's what's my goal for these sessions. So, as I said, constantly monitor those 4 areas. Keep on top of them. Maybe just at the end of each week, ask about how you've done in terms of managing them. Okay, and what can you do to improve them? As I said, just give yourself a pat on the back for when you're mastering some of those areas well, and also just keep an eye on yourselves to make sure you don't get complacent in any of those 4 M's, because as I said, we're all humans. Okay, it's easily done. So that's going to be really what we're going to be doing throughout all of these sessions, is weaving those 4 M's together, so it becomes almost like a trading plan for yourself to take away and be able to operate on. It gives you the decision making framework under which to be able to sort of to place a trade on the markets, to move from being an analyst to being a trader, to being effectively a sort of a professional risk manager. That's the way you're particularly looking at operating, and that's what we'll cover throughout all of these sessions. So what we'll do on the charts, we're still sort of building our profiles, do a little bit of analysis that based upon what we've covered in these particular sessions. If there's any questions, I'll happily take them, and then yeah, that will take us towards the end of our session. As always, if you have any questions, okay, please don't hesitate to get in touch with your account representative. The London number there, 020 772 003. You can mail them hello@admiralmarkets.com. They have a YouTube channel, they have a Facebook page as well. So by all means, get in touch with your account representative, and they'll be very happy to help guide and assist you with any particular questions or challenges you have if you're watching this on the YouTube channel later on demand. So if you just bear with me a moment, let's try and see if we can just switch across to the charts and have a little quick look at what we've some of the things we've talked about today. Super. So I'm hoping that you can all still see my charts now. Okay, still all you can hear my voice. I hope that's the key part. Okay. Just have a little sip of water there. Keep the throat sort of hydrated after talking for 40 odd minutes. So here we go. So listen, ladies and gentlemen, this is a chart of gold on the daily chart, and I wanted to bring this up to just give you a little bit of a good example of what we've been talking about for the last this session, but also the last couple of sessions since we began. I'm hoping that on the you can see the daily chart of gold. You can see I've drawn in this kind of pale green box here, and I'm hoping that you can see here that we had really price for what was that from start of December last year through till end of April. Okay, there we had four full months, okay, of price just being in that range there, okay, in that particular range. You can see there, okay, just bouncing back and forth, okay, and so if you were a range bound trader, well, that was blissful for you, okay. You would just be buying at the bottom of the range, selling at the top of the range. That's everyone's hunky-dory. If you're a trend trader, okay, if you were trying to trend trades, you might have had a little bit of a challenging period depending upon your particular time frame. But what we saw is price moved up into that area, okay, consolidated, all right, it was range bound, and then invariably what we saw was then price came down away from it. And hopefully you can see here, how with prices moved. And, I should say for those joining us for the first time, I said I'll try and keep my charts quite simple so that I have a blue 20 simple moving average, a red 50 simple moving average, and a green 200 simple moving average. You can see I'm drawing in particular levels of support and resistance that are of interest to me, and also if there's any particular sort of trend lines or patterns that I see particularly building in that particular market. And hopefully you can see there that once we were in that consolidation, well, then we were into a nice trend, and we can see that the price came down to particular levels of support and resistance, but actually we can see that it just continued to push through, and that's what we've seen today as well. It's kind of curious. We've broken that 1205 level. We're actually breaking the we've broken the 1200. Okay, 1200 psychological number as well. Okay, so clearly sort of that becomes an area of interest for us. We start to sort of have a little bit of an interest that that actually got down to that level, but it ended up breaking through, and I'll be interested to see over the next day or two how price reacts to that. Let's see how price reacts to it. We'll keep a really good eye on that. That'll be kind of an interesting one for us to see. Okay, and hopefully you can see that we have the fractals there. Maybe I'll just make hopefully just make them a little bit dark. I normally have them as like dim grey, because I can see them and recognize them maybe a little bit easier than someone who's completely new to using them. But hopefully you can see that once that price was once that price had broken out of that block and we were beneath the moving averages, beneath that breaking of that trend line, then price was just been in a nice downtrend on the daily chart. Okay, we've had a few little pullbacks there that have offered opportunities to get on board. We've seen that for the most part we've had we're making lower lows, lower highs in both price action and fractals, so it's giving us it's giving us, good indications that we were in a particular strong downtrend. And what we've seen is, levels of support have broken. That just gives us a further indication of the, let's say, how weak the bulls are and how strong the gold bears are, okay, at this particular time. And that of course has a that is all communicating to us, okay. There's one thing I wanted to take away, is that the market is always communicating to us, ladies and gentlemen. It's always communicating. It's always telling you a story. It's your job. Okay, it's your job to learn to read the language of the market. Okay, it's a little bit like, sort of for new traders, and maybe a little bit like starting off, with kind of music lessons as a child. Okay, it becomes quite difficult to work out all of the different musical notes. Okay, all the different octaves, etc. But with a bit of practice, you start to recognize what the notes are, and then with more and more practice, you can turn those, let's say, almost like individual notes. You start to be able to turn that into turn it into a beautiful piece of music. It goes from just being a sheet of squiggles on a paper to a piece of beautiful music. And it's the same with learning to sort of understand and trade your markets. Okay, you're just learning to understand what how price action operates. Individual candlesticks are of interest, but actually it's when you start to pull it all together in terms of the sort of the price action, the levels of support and resistance, whether there's trends, whether there's patterns growing, being able to put that together and recognize that that's when the markets your hopes start to turn into a you start to make a beautiful music from the markets. Okay, so the more you practice at it, the better you can operate. So we've seen that, and we've seen these sort of the markets operating like that pretty significantly. Okay, you can see that here we go. This is the daily chart of the Kiwi against the dollar. Remember what I was saying right at the start of the session, that I like, especially in FX markets, I like to be buying strength and selling weakness. So I know for the last few months that the US dollar has been very, very strong, and I know that the Kiwi dollar, the New Zealand dollar, has been very, very weak. Okay, and that has also played out. That's that's the fundamentals, that's the sentiment, and also the technicals here, ladies and gentlemen. Hopefully, you can see that we have been in a downtrend since about April, really. Okay, we had if I just let's zoom out a little bit. Okay, maybe just zoom in there a little bit. Well, what we had here was, I'm just gonna we had a little bit of a block. Okay, a little block of basically markets bouncing back and forth. Once again, the range bound traders would have been very, very happy, but then once we broke out of it, we could see price has moved down. Okay, it's had a little bit of a pullback here. Okay, not for those of you who are experienced traders, they might be able to sort of see the counter trend line break there, but it was we had a bit of a pullback before price moved down, and then we had price here, and I would say that actually you could probably see that. Hopefully, let me just turn these fractals a bit darker. Remember what I was saying earlier was that when I start to see lots of fractals at particular areas, okay, around about here, we can see there's about 4 of them around this particular area. That starts to get me interested. Okay, as a particular level there. Okay, so we can see that there. I'm happy to draw that in on the daily chart. It's an area, but you can see last week, at the end of last week, we had the little bit of dovish news announcements coming out of the Royal Bank of New Zealand, okay, AUDNZD, and that just added to this sentiment of strong dollar, weak Kiwi dollar, and we can see that has carried on down, okay. And so then you're starting to look at, well, where are the next particular levels of interest? So that's just a case about updating. This is an old chart for me here, okay. So I'm starting to look at where are the particular areas and levels that are of interest, okay, within that market, and look and see how can I operate within that. How can I start to identify those particular levels and areas that become of interest to me to sort of where I may want to sort of look at at sort of taking a particular look at the trading markets. So When I look at Aussie dollar, Kiwi dollar, what you'll find is Australian dollar has done pretty much the same here. Okay, we're breaking to new lows here on the Australian dollar. Hopefully, you can see there that has just been in a long trend. Remember what I was saying, that a good trend leaps off the charts at you. Okay, if it's not a case of having to fight it or having to sort of push it or force it on there. A good trend will sort of leap off the page at you. Okay, will absolutely leap off the page. It can give you something to you can actually see and work with. Okay, so this has been a case of, as I said, US dollar has been very strong. Aussie dollar has been weak, and one of the reasons Aussie dollar has been weak is that Aussie dollar's biggest customer is China. Things are looking a little challenging in China at the moment. Called knock-on effect of the sort of Trump's tariffs and the sort of trade war between the US and China. So of course, any hits that China takes, there will be a knock-on impact to the Aussie dollar. So that basically means people are worried about the Australian dollar. Okay, and what do we have? That has a knock-on impact on the strength of the Australian dollar. And what is the one of the big things that they dig out the ground? Well, that'll be gold. So not once again we've seen gold sort of going down. We've seen Australian dollar going down. We've seen Kiwi dollar going down. Okay, against all of that, it's just also the implication is also that the US dollar is strengthening. Okay, remember what I was saying. In FX markets, I primarily want to be buying strength and selling weakness. Okay, dollar has been strong. The other majors against the US dollar have been weak, and so that's the way I want to operate. Okay, I don't want to fight that. Okay, on the longer term trading. Okay, I basically want to sort of find the dominant trend and look to trade with that. Okay, that's what we're looking at. So I thought maybe we'll end up with something a little bit different. Let's just have a look at something a bit different. Okay, we've got Admiral Markets provide a good bit of opportunity and sort of trading instruments within the cryptocurrency. So maybe we'll have a little look at sort of this is Ethereum. Okay, and US dollar. This is the weekly chart. So remember what I was saying at the start, when I'm looking at, okay, I'm just interested in, looking at the monthly chart. I can see where the fractals are of interest to me. Okay, they start to give me an idea of where, maybe sort of some big buying and selling may have operated. Okay, just drawing in some significant levels of support and resistance. Okay, ideally, just areas that start to sort of leap off the chart at me. And when I go down to the weekly chart, well, then clearly I'm starting to get to this get an area here that is of interest to me. Let's just bring up my cursor here. Okay. This area here between about what say about 360 to about 420. That's clearly, it's clearly been areas that we can see that it every time it came up, it got knocked back, and then once it got above it, it came back, and then it used it as as the launch post for this for this huge move up. Came back down into that area and bounced off. Okay, and now we've actually crossed through it. Okay, in the last week or so. So I'm going to be interested to see. Will this come back up and retest this area? Okay. Those of you who will understand, know very often support becomes resistance becomes support. But as you can see, hopefully we had, we went really all the way up, and we've come all the way back down. Okay, and if I go down to the daily chart, okay, daily chart, you can see, as I said, we had there's a strong uptrend, a bounce off that area. Okay, 360. Okay, I'd call that about 360. All right, bounce up there. Okay, but then actually we can see that there was quite a significant downtrend, wasn't there, ladies and gentlemen? All right, and we can see that has just it's broken that 360, and this week we've just collapsed down there. And once again, that's an indication of just how strong the dollar is at the moment. Okay, we have to remember is that this is Ethereum against the US dollar. We've seen gold. Okay, we've seen Kiwi against the US dollar, Aussie against the Kiwi dollar. When the dollar is in FX markets, you always want to know what's going on with the dollar. Okay, because it's the big gorilla. All right, it's the big gorilla. You want to know, is it asleep? Is it awake? Is it angry? Is it rampaging? And it's fair to say at the moment it's rampaging. Okay, and of course that has a knock-on impact to all of the major I'd call it, say, major FX currencies, also the major commodities because they're priced in dollars, okay? Gold, silver, oil, all right? You've also got then, the major emerging market currencies. So if you have to look at Turkish lira, which, Turkish lira, Brazilian real, Russian ruble, okay? They've all been a little bit sideswiped by dollar strength, but even the sort of the cryptocurrencies here as well. Right, even the cryptocurrencies here against the US dollar, that's just giving us an indication of that there is enormous strength there within the US dollar there. Okay, so we'll just draw it to a close there, ladies and gentlemen. So the session was about just sort of identifying support and resistance, identifying particular trends of interest. Okay, identifying if there's a trend. Realizing that when when markets are bearish, we want to be a seller. When markets are bullish, we want to be a buyer. Keeping it nice and simple. Okay, whenever you look at a chart, okay, open it up on the monthly chart, start to just draw in particular significant levels. Right, go down to the weekly, carry on, go down to the daily, draw more on. Okay, and you'll start to have an identity of particular patterns. Okay, you'll see patterns, you'll see particular areas that that are of interest to you as a trader, and you'll start to sort of build that picture. Okay, and once you're building that picture, well then we're starting, as I said, we're starting to look at how does price react and respond when it's at significant particular areas, because that is what becomes important to us, and that's what we're going to start to build on over the next few sessions. So there you go, ladies and gentlemen. I hope you found that useful. I hope you found that helpful for your own trading. Okay, I hope that gives you plenty to give away. Okay, in terms of to take away to work upon. As I said, I'm here. Every 4 o'clock London time, every Monday we'll be doing this. Every session is just slowly but surely building on. If you've missed the first couple of sessions, then they will be on the YouTube channel. By all means, go and take a look at them. And as I said, take away. Start to, if you're not already doing this in your trading, start to just work with us. Just take your time. Okay, start to build a picture. Okay, and we'll start to sort of look and develop these over the next few coming weeks and months of the series. Super. Well, listen, thanks very much. I wish you the best success in your own trading. Okay, and I look forward to speaking to you next Monday. And good luck for the week ahead, ladies and gentlemen. Thanks very much.